Hi everyone, I'm Richard and welcome to my channel. So this is a very new channel and I'm really excited to share my first video with you. The goal of this channel is simple: to identify fundamentally strong stocks by analyzing real numbers and business performance. So my plan is to find at least one good stock or one good company every week where I can invest with confidence. Just to be clear, this channel isn't about chasing multi-baggers or expecting 100x returns overnight. It's about building a portfolio of solid, fundamentally strong stocks. So straight away, let's go to the next slide where we can see the stock. So after checking out of different stocks, ABB India Limited really stood out for me. It actually passed through most of my screeners. So in this video, I'll walk you through why I think ABB is a solid company to invest in. Of course, if you spot anything I might have missed or think I should add, do let me know in the comments, and I will love to hear your thoughts. Now, before picking any company, it's super important to understand the basics, like what they do, where they operate, and who their customers are. So I'm sure ABB is a quite familiar name and most of you must have heard about it. It's actually a Switzerland-based MNC company involved in electrification, automation, robotics, control system, etc. etc. So if you look at this slide, you will notice ABB's customer base is spread across multiple industries. That's a big plus, because even if one or two sectors or even more than three or four sectors slow down in for some reasons, it will not really shake ABB's overall revenue much. So their diversity keep them strong and stable. So this is one of the main reason why I choose ABB as like an investing stock. So now, all right, now let's get into some numbers. Starting with ABB's market cap. So you can see ABB have a 1.1 lakh crores, which clearly put it in the large cap category. So if you notice, you can see a enterprise value of ABB is little bit lower than the market cap. It is because ABB holds a strong cash position and has a very low debt on its book. It is only 74 CR. So comparing to the value, it is way less, kind of negligible. So for anyone who is wondering, what exactly is enterprise value, think if you are buying a company, like, so if you are going to buy this ABB, what is the real value of the company that you have to pay to buy the company? That is enterprise value. So enterprise value is like market cap value with by adding the total debt, because debt is also in the operation, and by subtracting the cash, because cash, the cash in the account or cash is not really generating any operating revenue. So that's why we don't include cash in the enterprise value. So overall, ABB's combination is of low debt and healthy cash reserves make it a financially stable and low risk company to invest in. So let's go to the next slide, where we will go through the growth of the company over last 5 years. As you can see on the slides, sales, operating profit and cash flow all have increased substantially over this period. I won't go into the exact numbers or percentage here, as you can see them clearly on the slide. What impressive is that company has more than doubled in size in the revenue from last 5 years, which is excellent for a large cap company. If you look at the operating profit margin, it has increased almost 8 times since 2020. Just for perspective, the current stock price of ABB is around 5,200 or 5,220 or something like that, while at the end of 2020 it was approximately at 1,300. So that's an increase, that's almost 4 times increased, which is actually slightly lower than the growth in the operating profit. This is mainly due to a dip in the price of ABB from last 1 year. This could potentially present a good opportunity to consider buying. So let's get a little deeper to evaluate whether it's a good buy at this price. So next important metrics we should look at are the returns on capital and ROE. As you can see, both are above 28%, which is very strong for any large cap companies. So now how we should interpret ROC. The key is to compare it with company's cost of capital. Those who are wondering, the cost of capital represent the minimum return expected on the capital invested, which includes both shareholders equity and debt, because both are into the operation. It is typically derived from a combination of fixed deposit or bond returns, average market returns, and the company's risk measured by beta. So I'm not going into the detailed formula here, but the main point is this: if ROC is less than cost of capital, the company is destroying the value. So it is very simple. So if you are investing 1 lakh in a bank, you will be expecting a minimum return, right? So after investing in a company, if company is giving less than that returns, that means it's destroying the value. So here same apply for ROC and cost of capital. So if ROC is less than the cost of capital, it is actually company is destroying the value. So for any company you can check both, and if ROC is greater than the cost of capital, then that means company is creating the value. The same logic applies for ROE, but in that case only shareholders equity and net profits are considered, because that is the difference between ROE and ROC. Most of you might be knowing this. And when you are comparing when you compared ROC with cost of capital, in the case of ROE we have to compare it with cost of equity, because the debt is not in the picture. So both in ROC and ROE, it is clear that ABB is creating value and remains a highly investor friendly company, because it's almost double than the cost of capital or cost of equity. That's a very good sign, and because of this I will say ABB is a investor friendly company as of now. So fundamental analysis, again we have to see the depth part. So here I don't go in much detail, because with the slide presentation itself it is very clear that ABB has very low debt. So very low debt, it is almost negligible as said before. Because of this, company is not obligated to pay significant interest from its revenue. So even a 1 or 2 year dip in the profit won't affect its long-term growth or cash flow. So I like to clarify that having debt is not always bad, because don't take it like that a company who have a high debt or moderate debt is a bad company. It is not like that. The companies who have debts are also good companies, but especially the startup or companies with high investment often carry debt. But the key here is to assess whether that company is able to repay that debt fast. So when a company have a debt, of course they will have to pay the interest. So if their earnings is not good enough to pay their interest, then that company is actually destroying the value, and it will affect their cash flow also a lot. So those companies definitely should be in your radar. And a high ICR is a strong positive signal. So ICR means interest coverage ratio, the ability of the company to pay its interest from the revenue generated. So a high ICR is of course good for any company, and while a negative ICR, as I mentioned before, makes it very difficult to maintain the cash flow. So in ABB's case, with minimal debt and a high credit rating, it is clearly a safe company to invest. So money will be safe. Again, continuing fundamental analysis only, it is always good to review the shareholding pattern also before investing in any company. So ABB have a strong promoter holding of 75% from the starting, which and still the promoter holds 75%, which clearly shows that promoters have a confidence in the company's long-term growth. So since promoters have the confidence, I think investors can follow the promoters' confidence. And there is also a decent institutional holding, while public holding is relatively low at 8.4%. So I can say in one way it is positive as well, because in case of any bad news about the company or the sector, the panic selling by retail investors is likely to impact the stock heavily. So since most of the shares are held by promoters and institution who don't sell, like the institution buys the stock after a lot of studies. So by just hearing some bad news, they are not going to sell out of panic like public do. So even if price dips up, but even if public sell, definitely there will be a dip in the price, but that dip will be without much volume. So that giving stock a good chance to recover. So overall, shareholding patterns also reflect investors' confidence in ABB's future growth. Let's go to the next slide. So after fundamental analysis, it is very important to see the valuation analysis as well. So with all fundamental analysis, it's very clear that ABB is strong, fundamentally sound stock. Now let's quickly look at its current valuation, because even a fundamentally strong stock can be a poor investment if it's overvalued, because we are paying a relatively higher price. It's very simple. So checking the valuation is very important. Of course, no one can predict a company's future growth exactly. So we typically value it based on the current and past performance, not on the future expected growth. So in ABB's case, if we just look at the PE ratio, which is above 60, it might seem expensive at first glance, and it looks very expensive at first glance, but we need to dig little bit deeper. Why is it trading at this level? Not only with ABB, if you see any company with a high PE ratio, just don't say, oh, this is expensive. We have to dig little bit deeper. Why it is trading at expensive? Is it really expensive? All those things. So one way to assess this, like whether the expectation meets the growth rate. So this PEG ratio, which adjusts the PE ratio for the company's earning growth rate. So the formula is very simple. PEG is equal to PE ratio divided by earnings growth rate. So if PEG is near to 1, the stock is fair valued. That means expectation is meeting the growth. And if PEG is greater than 1, it is overvalued, because whatever the PE expectation is not, the growth earnings is not meeting that, so that is overvalued. And if PEG is less than 1, it is undervalued. Of course, the growth rate is much better than the expectation, so in that case that stock will undervalued. So for ABB, the PEG ratio is around 1. So in screener it is showing 0.96, but with the latest figure I think it is around 1.2, which is still around 1, which indicates it is fairly valued. And this is mainly because of the recent dip. So with all fundamental analysis, it's clear that ABB is strong, fundamentally sound stock. And with the current valuation also, it is fairly valued. So valued. So let's go to the next step. So which is technical analysis. So technical analysis, I won't go deep into technical analysis. It is very simple. Just by looking at the graph, it is not very easy to predict the price. We can predict some support zone, resistance zone, that is possible. But with the looking at the graph, you cannot say, the stock is going now high, it is going to break out this zone. So if the price stock is after breakout, if it is not moving, we will say that, oh, it is just testing that. So one or other way will be there, and this for technical analysis, everyone will have their own views. It's subjective mostly. So I cannot say exactly this is what happening with the technical analysis. But with this, I can say, like, simply I can feel that there is a resistance near that 5,000 rupees zone, because you can see stocks slightly, once they reached 5,000, there was again a small increase. Now it's almost like a double bottom at 5,000 rupees zone. And if you look at the RSI, here I used Williams percentage R, which is at minus R. It is slightly into the oversold zone. So suggests that stock has some room to recover from the recent dips. So let's go to the next slide. So far I have been highlighting the positive aspects of ABB, but for full transparency, I'm not a promoter of ABB, or I do not receive any benefits from ABB for promoting it. So it's also important to point out some concerns. So as we discussed earlier, past growth has been excellent, but that doesn't guarantee future growth at the same pace. So if future growth falls short of expectations, the stock could experience a long-term consolidation or a price drop. So one observation is that there is a recent decline in FII holdings, even though DII holdings increased. So FII usually study companies carefully before making decisions. This is what I heard about it. While it's unclear if they found any specific concerns with ABB, it's worth noting that last year FII sold many shares across Indian market, which most of you might be knowing. Like last year, every day if you look into this, FII net sold was on higher side. So that may be one of the factor, but I'm not sure why FII reduced their stack in ABB. So another point is there is a dip in profit in the last quarter on year on year basis, even though revenue increased. This is likely due to rising raw material cost. So companies like ABB often take fixed price orders, and since it takes time to deliver, like it's not today they take order, they deliver it in next month, it may take years to deliver the projects. So any sudden increase, they usually calculate the price increase of the raw materials also, but in some case there may be a sudden increase in the price of raw materials can affect their profit margin. So this may explain the recent dip in profit, I'm not sure, but still a 12% revenue growth is there in the last quarter, so that is decent revenue. So I cannot find more risk about ABB. It's still, I feel it's a good fundamental stock in a fair valuation. So the final slide, conclusion. So my view is that ABB is a strong fundamental stock at a decent valuation. For those who are looking for a stable long-term investment, ABB, even for medium-term investment, ABB is still a good choice. It may be wise to buy on dips or use averaging or pyramid strategies to maximize returns. So I'm not telling to invest whole money at this point. Maybe like 20% of, if you are planning to invest 100 rupees in a ABB, better to start with 20 rupees, and slowly, like if the price is going little bit down, maybe we can use it as a buying opportunity, like buy on dips. And if it is increasing, we will do this pyramid strategy to maximize the returns. And make sure always keep a track on the PE ratio, like if it is increasing substantially as it increased before without that much corresponding earnings, then we may start to reduce the position. So anyway, I will continue to track ABB, as even I invested in ABB, and also other stocks which I will be posting from next week. And what I'm planning, I plan to post an update video about the stocks which I mentioned every month by tracking those metrics. So that's it. I hope you found this video helpful. I would be very happy to read your comments on how can I improve my presentation. Your feedback really motivates me, and if you haven't already, please subscribe. It will motivate me. Thank you. Happy investing, and see you soon with the next talk. Bye.